Hello value investors, thank you for joining me. Today I want to talk about Affirm. Affirm is a company that's highly followed in tech and it's something that I'm quite delighted to talk about. So we're going to talk about where the stock is right now, that is down 50% in the last 6 months. We're going to talk about its underlying prospects, and we're going to talk about just the landscape as a whole, and then we're going to talk about its valuation. So let's just jump right in. So as I already noted in the introduction, in the past 6 months the stock is down 50%. It's not only Affirm, so many fast-growing, unprofitable tech companies have just come into this basket. And the market, if last year any stock that was growing very fast was getting that kind of 20x multiple on the top line, right now the market is saying, okay, just dumping everything, irrespective of the underlying opportunities. The market is just like, either it's inflation or it's just SPACs unwinding, IPOs, it doesn't really matter. Right now, the market is just saying, okay, enough of this, just cleaning the slate of all these businesses. And it's just, some people even call it like a stealth crush, because it's difficult to see unless you follow these kind of smaller companies, because the big caps, investors have just been fleeing towards the big caps and seeing them as a kind of a safe haven. And you got the ETFs and etc. that are just so heavily weighted towards Apples and Microsofts and whatever, that the underlying stocks, the smaller caps, are just being absolutely obliterated. And many investors, unless you follow the space, you won't have really seen this. So I don't think that it's necessarily down to Affirm specifically. I just think it's just a general movement right now. What's more, just wanted to talk about that in the buy now, pay later space, we've seen PayPal make moves here. So PayPal just, they were a bit flat-footed, but all of a sudden in the last several quarters, we've just seen them take so much of their revenues are coming from this right now. Also, we've seen Square buy Afterpay. Some people say that Square overpaid for this opportunity. I'm not sure that they overpaid. I think that it's just a very neat fit. In my mind, I was always thinking, well, why was Square being so slow to come out with their own product? It could be the case that Square was doing quite well with Cash App. They didn't really need to be distracted with the buy now, pay later space. But in any case, by joining up with Affirm, with Afterpay, not only does it give them much more of a geographic move into Australia, but also allows for some cross-selling of the Australia market into the US market. So it's a very neat fit right there, but altogether this just shows that buy now, pay later is becoming quite in an interesting space. Obviously you got other players as well, not even going to mention all of them. You got a Klarna as well, and it's just a booming space right now. And I believe this actually validates much more of what Affirm is trying to do rather than being competitors. I think that this space is so big that the number of transactions and everything, that they're not encroaching on each other's space, just validating each other's business model more than anything else. It was like a few years ago, I don't know if you remember, everyone was talking about, it's only one cloud provider. And fast forward a few years, this is not cloud wars, it's like everyone is offering cloud. You got Google Cloud, Azure, AWS, IBM, there's so many cloud space. And then you got niche offerings as well. So also, if you look back, there was all this idea about streaming wars. There's only going to be one streaming player. Now we know that you got so many different opportunities, and I think that this is going to be the same thing here. It's not going to be one player dominating everything. It's just going to be many different specialized offerings. So yeah, I think that's quite interesting, because you can see that the number of active consumers using Affirm have actually up 60% year over year as of Q3 21. So their fiscal years is about to finish now. It's pretty much just finished. They're going to report in September their Q4 results, and they're going to talk about their guidance for next year. So their fiscal years are slightly misaligned, but for all intents and purposes, you can see active consumers are growing quite nicely. And I don't have a graph to show this, but the number of merchants using Affirm is up more than 100% year over year to 12K. So, if you get more and more merchants that are using Affirm's payment solution, it's obviously very compelling for the whole underlying thesis. And we don't have nitty-gritty numbers, but they say that plus 100% dollar-based net retention. So it's altogether, this is, showing that once merchants actually adopt the payment solution, they're not going to be churning out anytime soon, and you get a very sticky user base right there, and obviously that gives you a lot of visibility, which is what the market wants. The market wants visibility, and the part of the problem here is that Affirm, starting with last year, since Q4 of last year, we've seen this deceleration in revenue growth rates. You can see here on the screen that in Q4 of last year, revenue growth rates were 120% year-over-year growth, and there's been a very steady decline. So investors are like, what gives, Is this a fast-growing company, or is this a flash in the pan? And I think that it's going to be, if two things are playing out here. So the first part is that last year's Q4 was very strong, so any comp against that is going to be difficult. The next thing, I think that management being slightly conservative. So, these two are playing out. I think that when they come out, they're going to beat on the top line, and that's pretty much a given. I'm not entirely sure, though, if that's going to be enough to satisfy the market. What the market, I think, is going to want is to see them putting out guidance of more than 40% year-over-year growth rate, because right now, if they hit their targets for this upcoming quarter, they'll have grown this year by approximately 63% year over year to 836 million. So this year they'll have grown at 63%. So I believe that anything less than 40% compounded annual growth rate for next year, investors are going to be like, well, this is too unsustainable. We don't really know what it's growing at, and investors are going to punish the stock further. However, if the guidance for next year is a very strong, let's say 40-45%, investors are going to be quite forgiving, and in fact, given that the stock is down already 50%. So I mean, just as I touched in the introduction, so the stock is priced approximately 15 times next year's sales, but I believe that there's a bit of wiggle room. So I think that if we see indeed that the company is back on the aggressive, back growing at 40%, I think that investors are going to say, okay, yeah, 15 times sale for something growing at 40%, I'm going to go with that. On the other hand, if you remember that this time last year, any company that was growing at north of, let's say, of 30%, investors were just pricing that with a 20x multiple. So, in 2021, things are looking slightly different, but the underlying opportunity here is quite strong. So I think that I just put out some numbers here. So if we think about it, right? So Affirm right now is priced at 17 billion. And for it to fall another 50% to be priced at 9 billion, that's really, really cheap in my opinion. I think we're more likely, if you think of a risk-reward profile, I think we're more likely to see the company grow by 50% to approximately 26 billion than we are to see the company collapse further. I don't have a position here, but if you want to know what kind of stocks I'm interested, don't forget, check out my marketplace called Deep Value Returns. I'm not going to replace you, but I am a source of ideas, and I can tell you what I'm invested in, what I find compelling, and you can pick up like 1 or 2 ideas a month. You say, okay, yeah, that works for me. I think that resonates with my style of investing. Sometimes you don't have the time or the inclination. You just want someone to kind of do some due diligence, or you just might resonate with my value investment community in my chat room. So, we're rapidly growing. So investors that are like-minded, we question each other, we help each other out, and source of ideas is quite helpful, and just how to think about investing in general. So hope you found this video useful, and check out our marketplace. If you check out our marketplace, you can then subscribe anytime before 14 days, and you're not going to be charged anything. And if you stick